Hi, this is Mike Wise at Capstone Direct Mortgage. What we're doing right now is putting together a 4-week series or 4-part series on affordability. With today's interest rates going up as fast as they have, a lot of people have gotten out of the market to buy homes because frankly the interest rates are normalized, but they're actually higher than where they were. But that's put a lot of people out of the market and they can't afford a house. We put together some strategies that can actually put you into a house at a lower interest rate and keep the payment down at some lower levels. They may not be at the levels where we were at 3.5% mortgage rates, 9 months ago, but they are more affordable issues. And right now is actually a great time to do that because the interest rates have gone up and the perception throughout all of everywhere is basically that they're too high and that they're going to come back down. But even right now, we have some ways to help you bring down those interest rates and talk to you with your real estate agent to help you make a competitive offer. But because those people have gotten out of the market, there's more inventory. You're in control of the situation as far as the buyer is concerned. There's just more opportunities for you to figure out how to get into that house with a lower payment, even with today's interest rates the way they are. How to buy the same house with less money using the mortgage world secret of the seller paid buy down. Before I do this, I'm gonna actually tell you what a buy down is. The bank, they wanna lend out money at 6%. That's the return that they wanna get on their investment, so they wanna loan you 6%. As a borrower, you're like, I don't like that, I wanna pay 4.75%. The bank goes, no, we can't do that. That's going to cost us too much money. We need to actually lend you money at 5.375%. In order to make up the difference, you still want that 4.75%. The bank is actually going to require you to bring in 2 points or 2% of the loan amount. In the example that I'm going to show you below, it's about $12,600 in order to get that interest rate. And what you're doing is you're actually prepaying $12,600 to the bank so that they can still get their 5.375% return on their investment, while you still pay 4.75% over the entire term of the loan. All right, so in the real world example, what we're gonna show you is actually how you're gonna save cash today and more cash or more interest over a 15-year period of time. So in the example above that we talked about in the buy down, the bank is willing to lend you the money at 5.375%. The purchase price that you come to me and you say, Mike, I wanna buy a $750,000 house, and we want to put 20% down because we don't want to have any mortgage insurance. So you put $150,000 for your down payment, which gives you a loan amount of $600,000. Your payment in this example, with taxes and insurance, principal and interest, we call it PITI, principal, interest, taxes, and insurance, is going to be around $4,209. And in this example, your cash to close is about $157,000 to bring in to the escrow to close your transaction. So you're wiring $157,000 today to close this transaction. What I'm going to show you is actually the buy down. And we're going to go to the 4.75% rate that cost you that 2% up front, right? So that 2% is this $12,600 to get that interest rate. We're gonna buy the same house at $750,000, but in this example, we're gonna only put $120,000 for your down payment. That gives you a loan amount of $630,000. So we have less down, but a higher loan amount. In this example, at 4.75%, your payment is still $4,209. which includes principal, interest, taxes, insurance, and the mortgage insurance you have to pay for this loan. The big kicker here is you only have to bring in $140,000 for your cash to close, a difference of $17,000 that you save today that you don't have to bring in to close this particular transaction. In addition to that, because you're getting the 4.75% rate over 15 years, you're going to save another $30,000 in interest over that 15 years. We're going to save you $47,000 over 15 years in this example. And we're going to give you that same payment at the same purchase price. All right, so that actually was a strategy to help you, the buyer, to come in with less money to close while keeping your mortgage payment the exact same as you would have with 20% down. So the affordability here is that we've saved you about $15,000 of cash right now today. That's money that you can actually keep invested or do upgrades to your house or whatever you want to do with that money. So it's available to you to help you in your new situation as a homeowner. In addition to the affordability of just actually saving the cash, we will have saved you over $40,000 of interest over a 15-year period of time that you wouldn't have saved at the higher interest rate. So not only we kept your payment down, which reduced the amount of interest that you're paying, and gave you cash. This is just one of the strategies that we can use to help you in today's environment with higher interest rates. We hope you enjoy the series. If you have any questions, I'd be more than happy to answer those questions from you.